Okay, this is timing strategies for Friday, July the 18th, 2008. Client blog update. This is for clients' communication purposes. If you're a member of the public, you come upon this. This is not a recommendation to buy or sell, take any action in any investment or in any security whatsoever. If you have questions, please feel free to give us a call. And you can check that out on our website, our blog site, timingstrategies.com. So at any rate, what we do, what are we going to do? Well, let's take a quick look back here. We were long 65% as of the 15th, and we rode that up until Thursday. We cut that position down on the long side, and again, that was the financials, the indices, and the gold index to total that, the GDX, to total that 65%. On Thursday, the 17th, we cut all that positioning down by half. On Friday, yesterday, the 18th, we basically went 100% to money market, except for 10% in the gold index. The reason why? Well, instead of going through the whole deal on this update, give us a call. I'll give you all the answers to that. I'm just going to give you the what's and wherefores, not the why details about it all. So we're about 100% in cash, 10% in the precious metals fund. What am I looking for? Well, you can see now, I'm going to expand this up a little bit here. You can see that all year we had the B1 level, which was green. We bought in there back in March. The B1, which is a buy green, green buy level for the first level we were looking at, has now basically turned into S1, which is now our sell level at about 1280 on the S&P cash, 1285, and that comes out to about 128.50 on the spiders. So now our B1 level is now our S1 level. If you take a look, based on what we see as far as price action, if we get to that level starting Monday without a takeout of the low here, let me turn off the magnet. If we can get up to that S1 level in the next day or two, on Monday, Tuesday, without taking out the low of yesterday on Friday on the S&P and the spiders, we're going to start scaling in, possibly. Now there's no guarantees of anything here, because price action is always what determines what we do. We're looking to probably start scaling in short, maybe 20%. Now, again, this is all temporary because we've got the range. We could flip that around. We could go long. There's a lot of different things that could happen. But right now, based on our rhythms, our algorithms, and so forth, that 1280, 1285 level or 128.50 level on the S&P or the spiders represents our first S1 or sell level. Now, if we wipe out the lows, depending on how we wipe out the lows, that's kind of going to put us back into no man's land right now. I don't want to be buying that dip, but so unless we take out the lows, and regrettably if we do, I mean, you can't have it your way all the time. If we take out the lows and we come down to this level of about 1170, 1175, or about 117.50, 117 on the spiders, we'll actually do another buy job. All right, another drive-by job. We'll pick up maybe 40%, give or take. So it's kind of like we're going to go either way against which way the market moves. But again, the range that we have to work with right now is this range from here to here. From the lows of Tuesday to the highs of here. And we're kind of going to work back and forth. And again, based on our algorithms, momentums, and things of that nature, our systems, what they tell us to do. You can now see that 1320 to 1340, we just kind of halved it off at 1335 is our S2 level. If for any reason, and another S level, sell level, is right here at about 1300. So based on if we go higher in the next day or two without taking out the lows first of Friday, depending on how high we go, will determine a much greater conviction or a much greater probability of how much we're going to sell if we do that first. I want to go to the diamonds or the Dow. It's a little cleaner picture for me right here. if I show you the Dow using the diamonds as the pattern, these are our major levels. If we can get to 1170 or 117.50 on the diamonds for the Dow, 1200, 1220, 12200. This is the major sell level on a Dow. If we get up there, and when we get there, if we get there, absolutely, no matter what time it is, more than likely we're going to be going heavy load shorts, 60, 80, 100, 120%. I want to go to the financials because everybody has no need to talk about what's going on with the financials as far as the government rigging the market to make sure you can't sell them any further. Financials got a bounce. What that bounce could correlate into is a trade back on the XLF back up to about 22.50. If we get to that level on the financials, at the same time the Dow and the S&P get to where we're all mapping out our S1 and S2 levels, that will also give us a little more conviction on the sell side. If we get up there and we trade kind of choppily around that level, you can be sure it's possible that will be a lot of noise depending on how we get there at that level. That'll also determine what kind of size we put on the short side, above and below that $22 price tag. Let's take a look at the XLE. And one other thing I want to point out before I go to the XLE, let me go to the FXI. This is the Chinese stock market. I do manage for a lot of you folks, as you know, in the Schwab institutional platform. This is the FXI, and if we can get this indice or this ETF up to about 138 in the next day or two, 138, 140, I'm actually going to look at putting on a short position. I mean, we already have it, but I'm going to reload. I took a lot of the risk off back down at close to the lows. If that FXI gets up to that 138, 140 level, this FXP is an inverse 2 beta fund of the FXI. We're going to be looking at loading up there probably around the 73.50 price tag, give or take, based on what the FXI does. So that's what we try to do is cross market analysis, not cross dressing, but cross analysis, intermarket analysis, or whatever you want to call it. Gives me just a little cleaner picture on some things. Now let's go back to the XLE. Oh, and also real quick, the EEM. I like the EEM. Based on where we get on the EEM, if we get up there along with the FXI, we've got some sell levels here, and with the EEM we'll be using the EEV, which is again a 2 beta. If we can get the EEV back down into this level at about the $75 price tag, we'll probably look at potentially buying it again, but be that as it may, that remains to be seen. XLE, we have the DUG. We've got the DUG from up here, the DUG. We also added into some momentum down here on, was it Monday? We took half of the DUG off here on Thursday. We still have half a long position in the DUG, which is an inverse of the XLE. And you can see that that's worked pretty good so far. Based on what we see, I'm going to hold the other half of the DUG as long as we don't take out the highs of this level right here. I'll hold that 50% position we've got in the DUG and look to reload somewhere in this range, possibly, if we get it, somewhere into that level, right about 78.50 to $80, give or take, on the DUG. And that correlates, that's the XLE, so that's what we're going to be using on the DUG, which is, again, the mirror inverse opposite of that. So if we can get that down to about 32.50, $32, we'll start looking to get short or buy this DUG. Last thing I want to bring up is the GDX and the GLD. We're not getting a lot of love here, but let me tell you, with we're still long gold. That's the only position we have in our RIDEX end of day systems. I'm looking for the precious metals to start heading back up, and yeah, looking is about all I can do as far as maintain, tell you what this market's going to do. But you look at the GLD, and it's actually holding that level for the whole week. Again, there could be some noise around this point right here at about the what I just do. There could be some noise around this level, around the $94 to the $92 price tag on the GLD. As long as we don't take out this level down here, of about $90 or 900 bucks on gold. I'm comfortable with the GDX, which is kind of underperforming the actual metal itself. But once it gets going, this GDX and the precious metal stock funds do a heck of a lot more to the upside in volatility and downside as well than the actual metal itself. So again, that's the only position that we have right now in the market. 90% cash and 10% precious metals. That's kind of the update. We'll see what happens going forward from here. Other than that, have a good weekend. I wish you all the best. Good night.